There's 10 primary things that affect the cost of your car insurance. The first one is your driving record, whether you have tickets or accidents, if you have claims that involve medical or injuries. Those are the biggest pieces that you're going to see that make the biggest impact on a policy. The tickets are mediocre. You're going to see about a 10 to 15% if you have just a basic ticket. The accidents, you're going to see 15 to 30% depending on the severity of the claim. And then if someone gets injured, that's where you see the 30, 40% increases, because medical's where car insurance is more afraid. They know the value of your car. They know what a claim is typically gone for. But when someone gets injured, the risk of having another claim and the risk of taking that on, all of that adds up to a higher risk. And you're going to have a bigger increase if you have those happen. The second is the age. The age really ranges in really 3 to 4 categories. From age 16 to age 25 is the highest risk that you can get. When you're under 25, you're going to see that you're going to pay the most for insurance. If you're a parent insuring someone that's younger, then that's different, because if they're away at school, if they drive less mileage, some companies offer larger discounts for teenagers, things like that, that protect you, that don't kick you out of their insurance prices to where it's too expensive. From 25 to 50, that's that sweet spot where you slowly start to get better deals. When you hit 25, you're not going to cut your bill in half. It slowly will get better and better the closer you get to 50. 50 is like that guaranteed perfect spot if you don't have claims, if you live in a good area, you have good insurance score, all of those pieces that we're about to talk about here in a minute. Then you're going to get every company under the sun wanting your business. That's that golden spot, is to be 50. From 50 to 75 or 73-ish, technically some companies go to 70, you're going to see just a good average price. You're still good, there's no high risk, but once you hit into that 70 plus range, you start to go backwards now. But 70 is where you start to see it increase again. That's where it starts to get to where you're starting to stop driving because you're super cautious. Maybe your eyesight's not as good. Your response time's not as great. Maybe you don't have the patience. That's me at 30. It's just lots of patience. I want to drive fast. So all of those things add up and it starts to go backwards. That leads into the location, which is a large factor. In suburbs, you're going to have a little bit lower price than you are directly in a city. If you're in a neighborhood that has high risk, high theft, high vandalism, then your insurance on the specific car that you're insuring is going to be higher. Now, most people are going to start saying, well, wait a minute, I don't do full coverage, the comprehensive and the collision. I don't add that on my car. So why, even though I'm in this location, people are telling me it's higher because of my location? That is partially because there's still medical, there's still injuries that can be involved, false claims that happen in that area happen a lot more often. But also there's something called a profile. And that profile is essentially the folder that has all of your data. They're really evaluating you and your entire house as a risk. The location, the amount of credit that you have, the driving history, the tickets, all of these things are packaged into that profile. And what you do is you take that and you shop it with different companies. For those of you that want the easiest route to take, your best way is to shop with an independent agent, because what they do is they collect all that information from you. They go and talk to Allstate, they talk to Nationwide, they talk to Progressive, they talk to Geico, and they have these softwares that they can check all of these carriers at once. And they're able to find the best price, not because they're just the cheapest companies, but because they have the better fit for your profile. So every few years, that's why you hear people say, let's shop every few years, because your profile may have changed. If your insurance score got better, if you moved, if all of these pieces have made an effect, you might have a better deal with a different company. By the way, if you are shopping for car insurance, I'll put a link in the description below where you can work with an independent agent to where in your state they can shop you across those many different companies that we just talked about. And that leads to the controversy part. You're already probably typing in the comments, those are the warriors of credit. Credit does play a factor. It's a big factor in insurance. And technically it's outlawed in most to every single state. So you are correct. You can't use credit as a rating factor. But what they are allowed to use is an insurance score. An insurance score is your claims history, your ability to pay on time, and essentially your credit mixed into a handful of things. There's more that gets unpacked. I'll link a video at the end that goes more in depth if you want to learn about that. But in general, your insurance score is heavily close to what your credit score is. And that insurance/credit score can make or break the cost of an insurance policy. But that's not the only piece. Your car also makes a difference. I've got friends that have Toyota Camrys and then they're going to RAV4s, and then I've got friends that have Lexuses and they're going down to Kias, and it's more expensive because the car does make a difference. The safety rating is part of it. Again, we're talking about who's going to get hurt in an accident. Your Hummer is going to be more, not because the Hummer's more expensive, although it is and there's more of a cost to it, but you're likely to hurt someone else. So you're likely to have your insurance get sued. There's a higher risk to something like that. There's these symbols that cars have, and a symbol is just essentially a description in an insurance term that tell the insurance, here's the risk on that. Here's symbol 1, 2, 3, 4, and 5. Each carrier follows up every few years and downloads the symbols. That's why your symbol may have gotten riskier, because all of a sudden a car's been out for 3, 4 years and they realize it's not as safe of a car as when it was released. Just like Kia, they've had a big problem with theft, and that car has been one of the most stolen cars in the last several years. Because of that, some insurance companies won't even insure a Kia. Others will, but higher risk, higher costs. Since then, Kia has fixed a lot of those issues, the security issue that they had, and they're starting to get better on pricing, but it takes time. Insurance has to learn to trust that company again, because they lost a ton of money. They expected a really safe, a really good car not to be taken, and now people stole them and crashed them. Coverage makes as big of a difference as the location does, because the amount of coverage you have today affects the amount of coverage you have tomorrow. And what I mean by that is, let's say you're in a state like Texas or Georgia. They care more about the coverage you have now than a state like Michigan. And the reason being is that Michigan already requires you to have medical. In the other states, they don't require as much, so there's more lawsuits and they'll let you figure all that out. Michigan's like, we're just gonna make everyone take care of it anyways. So the effect on a Michigan policy is very low compared to the effect on a policy that's in Florida, Virginia, Georgia. Most of the states are the ones that get affected by the coverage. So when I come to a carrier and I say, I have this coverage, commonly people are going to carry, let's say, $250,000, and they say, I want to go to this coverage, and they want to lower the coverage. Because you're lowering the coverage, the risk is lower, because the insurance company says, we're not on the hook for that much. Let's reduce the price. So you're going to get a discount or a lower premium because that risk has lowered. Just keep in mind, most people don't realize that once that one policy renews 6 months or a year later, you're no longer at that high coverage going to a low coverage. You're at that low coverage, staying at a low coverage. Most companies will keep the price similar. You'll see a small increase because the risk has changed on the renewal. But a lot of people with those higher end companies, those premier type companies, you're going to see a larger increase because now the risk is higher for them to do so. The same is for the opposite. If you're carrying a low coverage and you're trying to go to a high coverage, it's going to be more expensive because they're thinking, why is this person wanting better coverage? We get that they should want to have better coverage. They watch Mark's video and they realize that they need to be covered for more, but it's still a risk to us. There's too many people that come in the door that say they want higher coverage, but they already had a claim. So they're trying to sneak in the door and get a claim covered. Most of the time you get caught, but those do happen a lot. Because of that, they are a little bit leery when you're going to a higher limit. The eighth is combining your policies. Most people don't realize that when you have home and auto, it makes all the difference. If you have renters and auto, it makes all the difference. If you want a 30%, 40%, sometimes even a 60% discount on your auto, then you add your home with it. Now, that's not always the case. Again, that's where those independent agents can do the work for you. They might realize that Progressive with a National General for your home, Progressive for your auto, is a better deal than putting Nationwide for your home and auto. They might realize that having Cure Auto in Michigan is a better deal than having a combo with Safeco or Liberty Mutual. So there's all these options that they can play with to find out who's going to give you the best rate overall. Yeah, you might pay an extra $10 a month on the car insurance, but if it's going to save you $800 a year on the home, it's worth it. You're going to spend $200 to $300 on the auto, save $800 here. You're going to net a $600 plus savings overall. Having that option is going to be the best route. Now, a sub piece to that is the next piece is you have to know the agent and trust them. If you don't trust the agent to do that work, there are so many shady agents out there. They let you do your own quotes. They let you do this. I want to just copy your coverages. All of those pieces aren't in a benefit to you. If your agent isn't talking about coverage and they're just like, oh yeah, we can do cheap, we can do cheap. I've got customers I'm actually working on right now that I can get them down to $100 a month. I'll tell them that's an option, but they're not going to be covered very correctly. For those that want to have the right coverage, they're probably going to be 120 to 130 a month, but now they're covering that brand new vehicle they just bought. They have the gap insurance, they have accident forgiveness, all of those things that you've got to be a little bit leery of that can protect you if you actually have a claim. That's the point of insurance, is not just to get the cheapest deal, it's to actually have a coverage that will make you whole in the event of an accident. Number 9 is the date that you purchase the insurance matters. When you purchase insurance today, for today, there's a higher cost to that. Actually, it's a standard cost. If you purchase the policy a week from today, or typically 10 days from today, if you shop ahead of time, at least 10 days in most cases, then you're going to get what's called an early shopper or a premier shopping discount. That's essentially just you doing the work ahead of time, not waiting till the last minute. They love that. Insurance wants to have somebody that has that. That's just like the longevity discount when you've been with a company for 3 to 5 years. You're going to get a better deal because you're showing loyalty, you're showing that you're responsible and you're looking for coverage, not last minute, but beforehand. And you're just looking for a company that wants your business, not you trying to find something that fits right now. And the 10th one is the mileage that you drive now matters more than it used to in the past. It used to be a thing that companies didn't care so much about, but because of all of the changes, we've seen the videos that I've made in the past that we're seeing 20% increase here, 30% increase there. All of that's essentially happened for the most part. And because customers were not happy about that, even though they had to go that route, if you were driving less, now it makes a difference. You're less risk. They're more apt to give you a better deal, price, or discount based on the mileage you drive. Actually, there's even companies that we work with that now do base pricing that are lower, and then they base you on per mile. It's essentially like renting your use of insurance based on the miles that you drive. So there's different options that you have that will get you that better pricing. Again, the biggest thing that we talked about is make sure that you have the right coverage in place. My Coverage 101 video here is going to go a lot more in depth. If you do want to learn about that insurance score we talked about, this insurance score video will go a little bit more in depth because it does also play a major factor in the cost. I'm Mark with Think Insurance. I'll see you in the next one.